Good evening, everybody. It is 6 p.m. right now. Welcome to the Monday Clinic. Back, not really by popular demand, just back because Christmas is over. It is Monday, the 8th of January. I am recording it, so my regular group members, I have no intention of sharing any of our major strategies. Ideally, please don't ask me any questions about those. I was going to make it quite a long session and go into something new, but I'm going to keep that for next week instead. And there's some things that this evening that do need saying along with the education. So I'll dive straight in without delay. It is almost a minute past. Again, I am recording. I'll keep it as short as is possible. Hi, Sakti. All good. Thanks. Nice to see you on. Thanks for joining me. And thank you, everybody. We are going ahead. Ideally, we'll save on the, what's the word? Bandwidth with video and that. You don't need to share your video. If you want to say anything, of course, always unmute and say it. Remember, this is a clinic. We're ideally not live trading, so the strategy doesn't matter. I have up on screen the red light, green light, and it is available freely on babypips.com and on forexstrategiesrevealed.com. Now, begin. Pressure is a privilege. Thank you, Petra. It is good. Nice to see you on. Our Peter sent me. Pressure is a privilege. So you're a trader and it's what you do for a living. Life is going to test you in any event. As a trader, as a dentist, as a driver or a mechanic, or anything else you might have set your sights on. It's a thing, but it's a thing we can deal with by solving one logical mathematical problem after another until we find our stride. In every walk of life, course of employment, or path on your journey, there is a way forward. The problems you encounter as a trader, they're no different from the problems you may experience in another course of employment. The rewards are very different, though. So, deal with the pressure and learn to thrive on it, ideally. Breathe, and remember we have a process and we have steps in the process designed to keep us on the right path, keep us safe. And I'm emphasizing those words for a reason. I'll get to it. We want to keep our capital safe and our losses to a minimum. I wrote those notes last week, sort of during the non-farm payroll week, and during that week it became apparent in the chat, in groups, in feedback received that we need to follow up on something else, or at least call out some of the traders in the group. Sorry, I'm not going to rant. Remember, if you think it's a rant, it's strongly worded advice. A specific thing, really. We need our big grown-up pants on, I think, and we need to accept, like really accept, in bold, italic, capital letters, that sometimes the market will range. The market will snake along sideways ahead of perhaps the NFP or other report, or following some hell of a big move. Oh, look, children, a big move, and then the market snakes along sideways. It's not like none of you would have seen that coming. All of you would have known that that's a thing because we've talked about it many, many times. So even after non-farm payroll, on the Monday following, it can be rangy, and there is a chunk of range, just to prove the point. We do, as traders, need to accept that and deal with it. Suck it up, dudes. It happens. There might be no trades available in our live sessions. If that's the case, then we'll take no trades, we'll be bored, and we'll lose nothing. It is reality. It is what it is. Something else we need, or really might want to look at here today, are pivots. Now that's not mindset, that's an actual physical thing. And there are some that don't follow exactly what is meant, perhaps in my language or in my way of doing it, about pivots, or by and about pivots. I've written by with a B-U-Y though, not B-Y. So some people don't understand what is meant, perhaps in my language, by and about pivots. We also wanted to cover scaling and swing trade management. Scaling has to be in line with a bigger trend, and it also has to offer the right recipe for more entries. We can look at it using the long range forecasting tool. So we will try and have a look at that today as well. First off though, pivots. And I hope you all understood what I meant there about that we have to accept what the market is offering. If, for instance, we'd have had a session between 4 and 5 today, can you imagine that I would have called no trades? You should, because I wouldn't have called trades. We'd have missed that phenomenally beautiful big move up, and we expect range after it. And for pretty much 2 hours, it's ranged. It's trying to carry on with legs up now. But that's the thing, isn't it? I hope you all understand that, and I hope you all accept it. Failure to accept it is no reflection on me. It's a reflection on you and your inability to put your big boy or big girl pants on. There were no trades in the session. Well, if there's no trades, we lost nothing. It is what it is. Now, pivots. Here we go, pivots. Here we'll start with the pink line of our higher value EMA set, and we can clearly identify pivots off that line. It goes below, it closes above, we still want the signal. It becomes a pivot here, it becomes a pivot here. I'm going to zoom in a lot. Right here is a very beautiful pivot where, yeah, we come down, 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 we hit the line, and it becomes a clear entry signal here. Now, yes, we have price action pivots, and we can say he's an inside bar. He's not really, equidistant at the top, but there's a breakout, it's a go. But because it pulls back, it would worry the weak. The strong would realize W, X, A, B, C, W, and the strong would probably see that. Bear in mind, we don't have our major secondary indicator on screen here. We would like our MACD, but those of you who follow me closely will remember that and will know it. Over here we have tweezer bottoms. A red followed by a green, and they're really beautiful tweezer bottoms. That would be a pivot. That close, that open, that dip, and that immediate rise, that would want me. That would be yelling my name. James, I'm a pivot, I'm a pivot. And then a break above the green line. And yes, a nice, clear pivot trade right there. I'm going to scroll down to see if he's actually on. I think he is. I'll double check with him later on a private message. But I'm going to scroll back, because here we've got a deeper pivot where it goes below the pink line. It's still a W. It's 2 p.m. Let's add one of our higher value EMAs. And oh look, children, a pivot, a low test bar pivot of one of our higher value EMAs. Ideally, I want you to ignore this stuff for the moment because it's really just pivots that I wanted to talk about. You can see the pattern, the X, A, B, C, W. And yes, the distance between A and B might be very quick, but it's still below X, so it's still a W. C is about equidistant to A, so we'd be looking for a similar height for the target, and it does indeed level off and give you a closed bar exit right there. That all day is a pivot, even it went below the line. Let's add another one. Let's go red line. Let's zoom out and let's see if we've actually touched it today. Yes, we've touched it today and we've gone below. So maybe the morning is a good chance to add our other higher value EMAs, the 377, the 610, the 987, which is one of the majors that I follow. And you can see some rather pretty pivots here and here. A high test bar fractal followed by another rejection of the 987. The entry off a pivot, if you're going to trade pivots, and we probably should do away with the signal for this, is immediately we reject the line. So that would be the entry. We've come off it. If we were looking for the sell, this would be the entry. You could say a break below, but because the EMAs are wrapped together, you'd worry by this bar, wouldn't you? And I wonder would some of you hold it. So we went above, we came below. If you were looking for the sell, if you'd seen divergence, if you were factoring in the battle at the big round number and the fact that it's the second test of the big round number, you'd probably sell it as soon as we come below that line. And a break above this high would be an invalidation level of the trade. So in, and we go through some lines, we faff. There's no value in this. There's no pips in it. So you know what we're looking at. We're looking at a mini M with an X, A, B, C, and an M. Now we need to solidly break a line, but we get a low test bar, and there's a pivot. And we know because pink crossed purple that this is likely now only a pullback. And now that, according to the upper part of the chart, is bullish. So going back above orange is all day take the pips. And if we look at 280 and 300, it's possibly only 10 pips. I'm not going to measure it, but that's what a pivot looks like. Breaking above the line here. For those of you who have taken the time to read one of my books, the very first one, it states quite clearly, a professional trader waits for price to cross a line or reject a line, and then a button is pushed. Knowing which line to trust is the key. Now, you all have my higher value EMAs, and recently we added even more, didn't we? We added those two. Are you visible on there? Where is that one? The 25? Yeah, he is. He's the 2584. He's right there. They're all Fibonacci numbers, so they're very easy to follow. If we look at this, a perfect pivot. Absolutely perfect. Right off the line and a fractal. And when we get one like that, it's nice to wait. Do I need to wait for a red candle to do the sell at that pivot? Not really. Not if you're on a 1 minute chart and you're waiting for a pivot. Are you anticipating the pivot? Remember, we would want our MACD for the divergence to know if we were truly waiting for this one or not. Now, have I got my standard on here? I do want to, yeah, it's a standard, that'll do me. So if we make him a bit bigger, I'll tell you what we'll do, we'll clobber him, we'll make him a bit bigger, and we'll say, are we looking for divergence, or are we looking at divergence at this point in time? Yes, we are. We can see a higher high over a clearly lower high. So a pivot, we don't have to wait for the red bar. It's a 1 minute chart. It closed below the line, low test. The minute that bar opens and starts going in, out. Inside bar, break of the inside bar. There's a few pips in there for you. Does that make sense to you though? And then the what is it, the classics amongst us, or I don't know if that's the right word, the pedantics amongst us will say, oh, but it carried on going. I don't care. It carried on going. I don't care. Do you know what I care about? I care about protecting our capital. I care about trading what we see. Because if we came out because it broke above an inside bar, yes, it's still red. Yes, it's rejected the line. So we can sell it again, and it struggles at the line and it goes below the line. It has too many levels below it for it to go sideways. I'd suggest that will be your little secret, June, because those lines, when you say levels below it, you mean what, higher value EMAs or what? Because all the higher value EMAs are above it. So explain what you mean there. Feel free to unmute. No? Okay, well, the other thing is, you see the way pink just crossed purple?
James,
Yeah, go on.
can you hear me? Yes. What I mean by levels is I'm talking about those EMAs
Below it, though,
below
because
that
they're all above
entry
it.
where the red candle is.
Yeah, but all the EMAs are largely above there. There's the entry.
Right.
You've got
So I'm talking
one,
about the
two,
bronze.
three, four,
Mm-hmm.
5, 6, 7, 8. 4 are above, 4 are below. So it's 50-50, isn't it?
Yeah.
Okay. So what? Again, I'll remind you. Have you read my books at all?
Um, No,
No,
haven't.
okay. I suggest you read book one because I've got to show you this now. I just have to. Apologies for this, lads. I know you've all seen it before, but if I go PDF docs and I go the trading code and I go any just open it PDF. I don't care what you open it with. Get it open. Stop messing. There you go. I just want the first bit, and the first bit says a professional trader waits for price to cross a line or reject a line, and then a button is pushed. Let's reassess. Did price reject a line with divergence? Yes. Has it crossed the line? Yes. Has it rejected the line? Yes. And an inside bar. Has it crossed the line? Yes. So you should be out of that one. But then it's a high
Okay.
test and it again. So yes and out and range. But these pink and purple close together, they tell you it's going to be range. And each time we reject a line or we get a new signal for the cells are valid. So too many levels below it for it to go sideways. No, it could go sideways. We can have a look at where it's just gone sideways right now for how many hours? The 90 minutes, it went sideways for 90 minutes. How many levels are below it? It's gone sideways for 90 minutes. Our
Hmm.
sessions last 1 hour. It can go sideways for 2 hours.
I think what I also meant was you won't get much of a move if you have those EMAs.
Exactly.
And I'm
But
not
that's
saying the
why we
trades are
talk
not
about,
valid.
yeah, that's what I was
Yeah.
talking about at the beginning of the session when we have to put on our big boy and big girl pants and know that sometimes sideways is all we're going to get. Yeah, there are small pips. Some of you have heard me use the words from the Whoopi Goldberg movie, what was it, when she's offered the $4 million. How do you want your $4 million? Oh, tens and twenties. Yeah, well, that's all there are in this. In a section like that where the EMAs are beginning to intermingle, tens and twenties. There you go. Tens and twenties. Thank you, Whoopi. You're spot on there, darling. That is tens and twenties. But this is a pivot. So if you went in somewhere off a rejection of that line on a breakout, you're in, and you're probably out. And you're out with maybe 5 or 6 pips, and then there's a pivot off a high test bar and a break below, and you're possibly in, and you're probably sweating for a minute, probably, but the EMAs are warped, and above that line is where you're out, so you're still 4 pips away, so it's in, and you've maybe made 10 or 15 pips off of that one. Then there's a W, an X, A, B, C, W, a double bottom. What are we rejecting? There's not an on there that's visible. It may be a different time frame. Notwithstanding that, there's some divergence right there within the indicator, a higher low on the bottom, sorry, on the top, and a lower low on the bottom. And then we've got equidistant bottoms here and a breakout, and it's not really a pivot unless we do have a higher time frame, but nevertheless it's price action. And then there, these higher value, the 987 is a beautiful target. But if we watch it up, have we rejected a line? No, we're testing them, and then we break above and we come back and test it. If we solidly come back below pink, I'd want to take the pips. I'd be taking probably 5 pips off it, but it breaks above. Once we break above a line, the line below us is now our tolerance, so we have like 10 pips as a tolerance. We test, we don't break, then we test, and we still don't break because it's closed below, and we test, and now we break back below. So you kind of maximum there, you're looking at maybe 24, 25 pips, depending on your tolerance. And do you see the reasoning behind that? Because of the rejection, the pivot. So it's not only a pivot to get in, but it's a pivot right there to get out. Pivots are really, really useful. They're massively helpful if you're going to use them. But you need to remember to use them on an as at now basis. I'm keeping up with a conversation that was made last week, really, when someone didn't know how I use pivots. I don't remember if he and I actually did chat or if someone else helped him out. But clearly, we can see there we're still in buy hopper mode. So these are pivots, closed above the purple, closed above red, closed in between. So if you've gone straight in off a pivot, you're sweating on that low, but that low isn't breached, and then we inside bar breakout. That's the nice spot, the breakout. Even it closed below, so you'd be sweating for a moment until this bar closed. 1 minute. It's a 1 minute sweat. It ain't such a big deal. And that then is your pivot, the close and the open, and a little bit of a tweezer bottoms pattern there. Breakout to the inside bar, and pips. A faff around the 987. So let's not belittle it. Let's say there's an entry there and it's in. We've gone above, it's come back below. It's 10 pips. That's it. And if anyone says, oh, I'd have held it today, well, whoop-de-doo for him. I'm happy. I'd have taken me 10. I'd have looked at the low test on that bar, the close, the break above, and probably that's where I'd have gone again with a, well, you know me, I like an 8 to 10 pip stop. Nas probably 10 pip stop. That line, a solid break. I might have sweated in that line at -5. Going below that line would definitely, for me, have invalidated it. It's not, it's broken a line. That's not acceptable for me. That one's better. We now have the opinion of potential tweezer bottoms, and then that one's beautiful and the sweat's over. After what? 2 minutes? 120 seconds, a close on the line, a break above the line, that's good. But those are pivots, and that's ideally how we want to handle our pivots. As soon as we've rejected the line, a bullish fractal, a 1, 2, 3, 4, 5 point bullish fractal, and again, the pedantic would say that's the beautiful spot because now you've got a 1, 2, 3, 4, 5 point bullish fractal. His low isn't breached. Tweezer bottoms, they agree, and a break above him, and that's the sweet spot. Notwithstanding, it's the same level. You're getting in there or there. There's barely a pip in the difference. It's a MACD scalper pattern on the MACD, and if that's your entry, fair enough. It's above a big round number. That's above a big round number. So above is above. It's I'm going to sadly use the word fart of a difference. There is the breakout of an inside bar with 10 pips. As at that breakout, I'd be saying, you're my tolerance, I'm not taking less than 5. And then I'm seeing faff. Why am I seeing so much faff? Well, there's some divergence with the higher highs, the lower, where are you, cursor? The lower highs, and then divergence within the indicator. And we stay above the line, so the line becomes your tolerance. And if the line is only 5 pips away, we know that from the line to the next line is another 20, and 25 pips is a decent move. None of these pivot off of that line. So the only thing you can truly do to help yourself manage this trade is to draw a valid fib, run a greens, 3 greens to the red. That's it. 1, 2, 3 greens to the red. You know it's going sideways, but it never even breaks to 50%. So there's no big deal on sweating this one. You could draw that as soon as that line's finished. This line didn't barely test the line of your tolerance. There's no pivot here other than the pivot off the 38.2, and then a break that allows you, and you all know that I'd ladder that one and it'd give you another 38.2 and further options to carry on to more pips. But those are what pivots looks like. It's not, well, it's broken above that line, so that's my signal. There's your signal. That's where your signal is. That's the pivot off the EMA with the tweezer bottoms. Yes, you can go on that one because it's broken a line. Yes, you can go on that one because it's broken a line, but it's pulled back and it'll probably worry you. So the earlier you choose a pivot, the earlier you identify a pivot, the better. And we sometimes talk about threes. It tests a line 3 times. Test, and break. Brilliant. Test on the upside. Brilliant. Now look at that again for me. We tried to go back up and the line held us down. We don't want to go down, clearly, because we've gone back up. We blast right through the line. Great. On the way back down, what was resistance is now support. And it's proven support. You're in buy hopper mode. You've closed above. You've opened above, closed above, opened above, closed above. There's your pivot. That's the real pivot. And we can look at that any time of day. We tried to get through, we failed. That's a beautiful pivot because it's convergence. I'm going to suggest there's a bit of divergence within the indicator there. And the minute it moves away from the line, that's your sell. You move away from the line, hit the button, and that's all your profit. That line is your profit. These lines are all of your profit. There. We got an inside bar, a breakout. What else have we rejected? There is a reason to manage the trade. If we have a look at him, what's he done? He's broken above the high and he's saying, hey, manage the trade as a worst case scenario. You're 19 pips up. Me with my feeble rounding brain, I would be suggesting I'm not taking less than 15. But then we get an inside bar and a breakout. Brilliant. And a bigger breakout. Now I can consider locking in something like 20 pips there. Happy days. And it drops, inside bar, breakout, breakout, but low test. There is probably where I'm coming out. Coming out down there, well, actually, if I'm up 50 pips, what am I up? You know me, 53, 54. Okay, no, probably would have given that a chance. That then would be like 45 pips for me. Breakout and retest most of the time I observe. There you go. Eve is right. The breakout, break below, retest it, another retest it, and tally ho, we go. EMA past it. Well, we use all these higher value EMAs anyway, Petra, so I'm happy with them. I like them. They do everything that I ask of them. Show me where the real valid pivots are. So many times I've spoken to, and I'm going to use inverted commas, professionals who use a random round number, a 50 EMA, a 100 EMA, a 200 EMA, and I heard one professional, and he was given a presentation in the what's it, the Shelbourne in Dublin. It's a hell of a hotel, and he said, because that's the death cross, that is. And 2 weeks later it was on the way back up again. So death cross my foot, I'd suggest. It is what it is. EMAs cross, and then they cross and they cross, and that it happens. Price crosses them, and that's what we want to know. We're trading a 1 minute chart, and if we put our signal line back on for a moment and we say there's a cross above, there's our RTF, there's our hopper, and our hopper agrees with the break of the 55 there, so it's absolutely in and in, and possibly scaling in. There is a rejection of a line. So anyone who says, oh no, I'd have held it there, well, fair play to you. Absolutely, I'm happy for you. But it's got higher highs, it's got lower highs, and there's some divergence within the indicator. I see a low test bar. The break below it would have me saying, James, TTFP, take the freaking pips. You're taking, what are you taking? And how did I lose my mouse there? You're taking 28 pips. It's almost a gate. You were up 32, it's a gate. Do you know? I would protect my capital all day, every day. Then there's a flag and a breakout. So there's potential to go back in from there if you really want to, or a break above the line, a rejection of a line and to come back and maybe a 2, a 3, or a break even. There's reason to leave that alone now because the EMAs are suggesting long by very nature of their angles, and this is suggesting a short. So you're looking for a proper, there's an X, A, B, C, W, and the RTF again, the green again. You all know my major favourite indicators. So, and tally ho for pips. It's the same story all day, every day. Pivots. Look at those beautiful pivots along the blue line there with an X, A, B, C, W pattern. And it's really nice. And it's not only rejecting this light blue line, but it's rejecting a big round number because it's not attempting to go back through that. So you know you're going to want to go long. And maybe the first rejection isn't the one. There's some divergence within the indicator. Now we've got the RTF. Now we've got a real serious reason because we've got the RTF, a MACD scalper pattern, and it becomes a hopper by the time it goes back above here. That's a really nice one. And if we have a look at what pips are available in there, it is, if we said as a worst case scenario, it's above the line from there, it's got a 8 pip invalidation, and it delivers you 25. That's what a pivot looks like. That's the reality. You can wait for it to go back above a line. Absolutely. You can. Do you have to? No. wouldn't be a valid, well, it wouldn't be a real serious pivot then, would it? It would be a signal following a pivot, which is right. Divergence, rejection of a line, signal, DR, S. He would all day be the S, the close above that line, if you like. And remember the close bar to close bar exercise? So him to him would be your pips on the close bar to close bar exercise. But they'd be yours and they'd be valid pips. This isn't a valid sell. That's a valid close above. You'd be allowed go long. That's a valid close below. They would be your pips. Valid close bar to close bar pips, without question, following the rejection of a line, or if you like, a pivot. Yes, it goes below, it's still a pivot. Tweezer bottoms, pivot. I don't care that they close together and there's no wicks. It's still, for me, on a 1 minute chart, I'll take that as tweezer bottoms all day. Absolutely. And then divergence up here, higher highs, lower highs, a breakout below the low. I'm taking the pips. I'm absolutely taking the pips there, not where the closed bar thing is. There would be your entry, there would be your exit. It's 18 pips. That's the reality. Or you can wait and take only 12. But the divergence is the clue. And has it pivoted off anything? Well, you all know about my 40s and my 60s, and there's a 60 up there. Yeah, we haven't reached it. Don't care. There's enough divergence telling me we're not going to at that point in time. Divergence, rejection of a line, absolutely. And there, I think we looked at this one earlier, X, A, B, C, W, a signal. And off we go. Really pretty. That's a very, very, very beautiful pivot. If you were of a mind and if you were of a knowledgeable nature, you'd see the tweezer bottoms here and you'd say that this low is higher than that low. This low is hell of a lower than that low. It's red. There's a fart of red in there. So that's divergence. That would be your pivot. You could say, I'll take the breakout. But then are you planning for the W? Are you expecting the W? Is there a reason you're not? You should be. If I move him over so that he's all you can see, so that that red line's all you can see. As at now, yes, you're waiting for the pivot. Yes, it looks like a pivot. Cool. It's starting to curl. It looks really good. The divergence is in there. Yeah, brilliant. Happy. And are we now happy? And inside, are you now happy? That's where the weak begin to worry. And you've all of you, I would wager, have heard me by now saying we plan the patterns. There's a potential W here, which means that's XA, that's AB. We're looking for B to C, another rejection of that line, and we're looking for a C to D leg. Okay, there is a potential tweezer bottom, and it's kissing off the zero. Are you going to reject it? Yeah, good. We've broken above them. Here's your pigeon. As soon as we go above there, you're in. We can see the C to D leg happening now. So that's just signal then. That's the pivot, that's the signal. But sometimes a pivot needs to mess with the B to C part first, and it's something you'll just have to get used to. Again, we have to put our big boy pants on for that. Now, we're 32 minutes into the recording. I've prepped something for next week, or we could do it now. I want your views on it, everybody. What are your thoughts? Do you want to do it? Do you want to keep this a nice short recording, or do you want to do it now? And I'll find something else for next week. My vote is for keep it, but it's something I've been using. Next week, says Damon. Okay, nice one. That's a deal then. I'm going to end the recording, and then if any of you guys want to ask me something about our strategy and stuff like that, by all means, you're in the group, you go ahead and ask. But I'll stop the recording, so I'll say trade safe, everybody, and I'll see you on the next live session.